I am incredibly optimistic on our industry. We are in the middle of one of the greatest times to be in this space. I think we'll look back on this time and be like, look at everything that was happening and all the opportunity that exists. So self-awareness is incredibly important. If you want to grow, we have to, as an industry, start to take a small portion of our resources or capital and allocate that to moonshot type things. My name is Ryan Hanley. I'm the founder of Rogue Risk, and this is the future of insurance.
This episode is brought to you by Ascend, the first modern insurance payments platform. Ascend is an all-in-one solution for premium financing, payment collection, and market payables, so you can sell more by eliminating labor-intensive processes and providing your customers with a great online checkout experience they expect. The guest in this episode, Ryan Hanley of Rogue Risk, uses Ascend and says, "We're an innovative agency and always looking for new ways to increase our margins. Ascend helps us to be significantly more efficient and profitable for premium financed and agency-billed accounts. Our customers appreciate the streamlined experience too. Find out more at useascend.com."
Ryan, it's awesome to sit down with you, and well, at least this side of the mic. You've had me on your show, but I appreciate you coming in to do this one.
Oh, so much my pleasure, man. I'm looking forward to it.
So, for those who don't know who you are, which means they're probably just not on LinkedIn, but tell everyone a little bit about who you are and what you do.
Yeah, so I've been in the industry for 16 years. The first 8 of those years were as a boots on the ground producer. I actually got in the industry. It's kind of a scene out of like a mafia movie. I wanted to marry my wife, and my father-in-law pulled me out of a Christmas party into his wood paneled high leatherback chair office in his house and basically like made me an offer I couldn't refuse, which was essentially, I think, I don't want my daughter to be married to a bum, so I'm going to have you come work for me so I can keep my eyes on you. And that was how I got started. You know, basically that was my dowry for my wife's hand, was to come sell insurance for my father-in-law, which I gladly agreed to, and we're still together. So things that seem to have worked out, but
it's not quite the normal, like, I got into insurance by accident story that everyone starts with, but also maybe not as intentional up front or for good story.
It definitely was. I guess not an accident, but certainly not my life's goal, I guess, is probably what it was. Although, you know, work in general has never been, I was never that kid who was like, I want to be a doctor when I grow up. I want to be this when I grow up. I don't know what it was. I never had like a clear vision of what I wanted to do ever. I loved sports. I loved playing baseball. I loved playing football. Injuries took my football career away, so I had to go full-time baseball, and I did that, and I played in college, and I just, was smart enough to get by, and enjoyed doing all the extracurriculars that came with school. I never enjoyed school. And it's probably the complete opposite from today, where I just devour information and different, I guess that's probably the way it is with a lot of people. Like, if you could go to college when you were 40 and go back and have the same freedom, it'd be amazing. You'd go to all your classes, you'd be on time. You do probably some of the nerds.
Maybe some people still struggle with the time thing, but
but that was not me. So just kind of fast forward to this. So I was boots on the ground producer, hawking home and autos across kitchen tables, driving around to strip malls, dropping off business cards, and realized super quick that I was terrible at it. And about a year and a half in, my father-in-law tried to fire me. And if you've ever been almost fired by your father-in-law or a in-law, it's not a real pleasant experience.
No.
So after some begging and pleading, I got him to keep me around, but I knew I had to change something because it just wasn't working for me. And that's when I turned to digital. It was like, this is 2008, 2009. Digital is just trying to shake shape. I'm kind of listening to some of the influencers at the time going, I'm really bad at doing business this way, but maybe this other way is an option. And I got really into LinkedIn and blog and creating content. Fast forward, I kind of hit a glass ceiling at the agency. My last name is Hanley. Their last name was Murray. It was never, I was never going to be part of that thing. Yeah. So I parlayed that and become the chief marketing officer for trustedchoice.com. I built the Agency Nation platform and ran the first 2 conferences, first 2 Elevate conferences. Then became the CMO of Bold Penguin. I had, unfortunately, a family member get a terminal illness, which forced me not to be able to travel anymore. and that was a requirement of my position at Bold Penguin. So I had to kind of resign, I guess. Found the next best thing I could find that didn't require me to travel, which I became the CEO of a 6-location fitness franchise. Grew that, almost doubled the size in 9 months, when we went from 2,000 to almost 4,000 members in 9 months, at which point the founder realized that the business was like fun and profitable again and fired me and took the CEO role back, which was kind of the big flashing neon light from the universe saying it's time for you to be your own boss.
Yeah.
And I had the pleasure and an appreciation for having sat in rooms over the course of my career, which I probably didn't deserve to sit in. Sometimes as a participating member, sometimes it's just a fly on a wall.
Yeah.
But my time at Trusted Choice and Bold Penguin and really, and even when I was an agent doing a lot of speaking, I got to meet tens of thousands of insurance professionals, from carriers to vendors to consultants to, to technologists. I was right in the forefront of the InsurTech revolution, kind of probably fighting for independent agents, or at least advocating for their role in that revolution that didn't happen.
Yeah.
And has really been able to see this coalescence of, hey, we're going to disrupt the independent agent, to, wow, why don't we just work together and find a better way to do business, which is really what Rogue Risk is. So I call Rogue Risk a human optimized agency. I feel like, our goal is to take the best aspects of what make traditional insurance so profitable, so important for the last 450 years, and evolve that into the InsurTech and digital capabilities that I know are out there. And how do we mash the best parts of both of those and create an agency that serves, in our case, small business customers better? And that's what we do every day.
It is kind of full circle, like from that moment where your father-in-law, or maybe he was still future father-in-law at the time. I don't know if you had already at least like locked in his daughter so that you were safe.
Yeah. I locked it in pretty early.
Like from having to kind of reshape what being an agent meant to you, to what you've built today and what you're building, and how originally, like maybe it was whether you're good enough at it or not, or your local market was receptive to what you're doing or not. But now at a national, international scale, the whole market has shifted. The engagement style has shifted. The tools have shifted. I mean, a lot of things that you're doing now, like LinkedIn had no video back then. YouTube was still pretty new. Like I think they had sold to Google at that point, but it was still like, a lot of these things didn't exist yet, or were very new. So it's kind of like that early switch that you made was the training ground for what's going on right now and what you're building.
Yes. Yeah. It's, I saw the writing on the wall in 2011. Yeah. And then I saw the results in 2012. So I knew what was possible. I consistently found myself as the number 2 in a place where the number 1 did not share my vision.
Yeah.
And that's not that their vision was wrong. It just wasn't my vision. And that caused friction over and over and over again. Yeah. And, that you could say that's part of me. I had someone yell at me at a speaking gig, maybe it's your fault, when I told the portion of my story where I kept getting fired. Which is true. I don't protest to be the easiest person to deal with, because I'm incredibly hard charging, ambitious, and I don't give a shit about losses.
Yeah.
And I found that coming up in our space, one of the hardest things for, I think, a lot of leaders to deal with is that you're going to take losses and have failures if you're going to innovate. And our industry is unwilling to take a loss, right? Or even a perceived loss, right? They would rather play it safe and take that nice, easy, methodical path and never really have a big win, but never have a loss. And in that way, they can just keep incrementally moving forward while everyone screams, there's a better way to do this. They're unwilling to take those lumps, to throw a brand out there. Now, granted, there are examples of it happening.
Yeah.
I think a lot of that it's just incredibly poor execution. I think they were good ideas, like Travelers buying Simply Business. I mean, just now, Simply Business is starting to become moderately relevant in the US market. And how many years? Was it 6 years later, 5 years later? And that was just poor execution on the part of Travelers in implementing that business model. And,
Yeah.
you know, and that I think Travelers was ballsy and had a very, I think the foresight, and I know some of the people involved in that project, I think it was a great purchase for them. I think it was the right move for them to make, but then they tried to apply the let's not make a mistake mentality to Simply Business instead of let's get this thing out in the market and see what the hell happens.
Yeah.
Some stuff will work and stuff it won't. So, you know, that mentality is part of who I am.
Yeah.
I get hated on all the time. I have a podcast, you know, I say things exactly what I mean. And I get, you know, there's like an entire Twitter thread that basically is people that just, you know, take what I say on the show and tear it apart.
Wow.
And, you know, and it's really funny. But I just could care less. I'm going to lose, you know, I'm going to lose 50% of the time, but I think the wins will be much bigger. And that mentality is what drives Rogue and probably what drove me out of all the previous organizations that I was with.
I think it's a really worthwhile conversation for the industry, the mentality one, because, you know, a lot of what you're saying resonates with what some of our past guests have talked about as well. And there's someone, I can't say who it is because I couldn't release the episode for some internal political reasons at the carrier, but the CEO of a carrier was, we did an interview and he said something about how the industry is really trained on iteration. And you think about, like, you get your product out and then how does it evolve? It doesn't actually. It's just like there's a reg change or there's an update to the rating model or whatever. And it's just iterated. And like once the auto product is built, it's basically just in the product management life cycle of like the regular ticks and tweaks that, you know, come through. And that then permeates because the people doing that are, you know, they're going to move up through the org. And so they're being trained on kind of like the iterative mindset, which is, like you said, is we're not in the like, let's risk breaking it kind of mentality. Is like, just make it slightly better or make that little tweak and keep it out there.
And, you know, and for anyone who's listening, who's in any of those organizations that wants to get defensive, please, I understand why they do that.
Yeah.
If I worked for one of the major national carriers and taking a risk that's not what you want to do. Like, you know what I mean? Like these companies, you know, you look at everyone, you know, I heard a lot of, you know, Liberty buying State Auto and everyone went up, there goes State Auto. You know what I mean? They're going to get sucked in and any of the cool parts will get taken out and it'll just become another brand. And, you know, look at what happened to Safeco, which is Safeco's fine. You know, Safeco was on the cutting edge of innovation in my mind for personal insurance right up until Liberty bought them. And now they're just a nice, safe, kind of standard lines carrier. There's nothing innovative about them.
Yeah.
They've kind of been surpassed in innovation, but they're more stable and their rating is a little more stable. So it's like, you know, if you're going to ask for innovation, you then have to take the lumps that come with innovation, right? Which are unstable pricing. Look at Plymouth Rock, right? Plymouth Rock is doing some really cool things for what you would consider a legacy carrier in terms of how they're rating. Well, everyone says, well, they come into a state and they got great rates and the rates fluctuate and they go, but I'm like, that's because they're doing new things with pricing and rating and data that other companies are unwilling to do. So if you want the new cool stuff, you have to be willing to take the lumps that come with the carriers that are trying the new cool stuff. You can't then go, oh, this is what everyone does. They buy premium. Plymouth Rock's not buying premium. They're trying to figure out a new way of rating stuff to make our jobs easier and insurance in our clients' lives you know, easier or you know, whatever. And I just, you know, everyone gets frustrated when some of these things don't work the way you want, but you can't have it both ways. Like if you want safe and secure and steady, Liberty buys Safeco and now Safeco is safe and secure and steady and you don't get the innovation. If you want the innovation, Safeco stays out on their own, but they have crazy pricing all over the country because they're trying 10 million things and trying to innovate. And you just don't get it both ways.
Yeah. Sean Harper at Kin was talking about this, and like, we can't begrudge the legacy companies for taking that safe and stable route because that's their role in the industry, is to create that stability. But you also can't write off the startups or the, you know, folks like Plymouth Rock who are acting that way, who are trying to push and trying to find something new that could move the industry. And that's why you need both of them.
I had someone, so I'm a big fan of what David McFarland and the team over at Coterie
Coterie.
doing. I I think one, he's one of the smartest guys out there, people out there, I guess, out there doing things. So I think that's really cool. I put him in the same category as like Steve Lakis at Branch or Kyle up at Clear Cover. I mean, these are really intelligent people. These aren't just technologists that did some regression analysis on a Stanford MBA program, and said, hey, we're going to disrupt insurance. These are really smart insurance people who understand the space, who put in time, who may be on the younger side traditionally, but are certainly, experience and everything is right in the sweet spot. And they're doing really interesting stuff. And I had this traditional carrier kind of blow Coterie off to me. And I said, pound for pound, I'd rather put something with them than you. And the guy went, oh, like he had like a physical, we were on a Zoom, but I could see like a physical and like verbal reaction to that. And I said, yeah. I said, think about what it takes to write a policy with you. I get that your brand to you is worth, quote unquote, franchise value, which is again, the stupidest. Any carrier the only carriers with franchise value left might be Erie and might be the carrier from Michigan State, and not State Auto, auto owners. That's probably it. Outside of those two, I don't know who has franchise value anymore. Right. So, and even that is debatable since both of those companies are very difficult to deal with, but I could still buy the case for those two. So everyone else is basically just the same with a different underwriting model. And I'm like, think about how hard it is to do business with you. Like let's talk about it. Let's talk about the steps that I have to take to get a quote to you, let alone my insured has to take to get a quote from you. Just think about all that time. And you're like, well, this is the way it's done. This is the information we need. And the insured is going, why do I need to tell you that how much square footage is in the building that I'm renting an office from and what the other risks are in that building? Like, is that like really for this consulting practice, is that really a question that you need to know? We need to tell you what the other 7 residents are of this office building. That's something you need to know. Like that makes no sense.
Yeah.
And
you're not going to get you're not going to get that accurately.
No, because you know when everyone goes, no, they're all just office.
They just go back and they adjust it. Like, nope, we're alone.
Yeah. You're fine. You know what I mean? Because it's a silly. So when you think about that and you think about what Coterie's doing, the fact that like in some cases with like 2 or 3 questions, you're getting PL or a GL, PL. You're getting, now they've added, a bunch of others like hired and on auto and they're constantly adding new coverages where, yes, versus a Hartford BOP, is Coterie all the way there? Not yet. But I will tell you that for certain classes of business, particularly professionals that need PL in addition to their GL, they are probably one of the best options in the entire market today. And you cannot blow them off because their process happens like this: 7 minutes. You're closing accounts in 7 minutes over the phone, one call closes. And that is worth it to me than all the little schmoogy add-ons that no one's ever going to use in the bot product.
Yeah. So I've got David on the show too. And I should add, like, he's brilliant, but you almost wouldn't know it because he's just like super down to earth, easygoing, nice guy. It's not, and maybe that's why people don't, they're sleeping on Coterie. But there is a lot there. It's really clever.
I think they're sleeping on Coterie because they don't want to, it's like an ostrich thing. It's like, if we just pretend they don't exist, then they really don't exist. When, I think branding wise, they got the financial backing. They're starting to move to their own paper, or at least making the move to their own paper. Like, the things that are happening at that company, like, are they going to overtake, the big nationals on the East Coast? No.
But are they going to be
Yeah, but it's not exactly. It's not about that.
Yeah.
They have the ability to carve out a market that is incredibly valuable. And if you just think about Coterie, you're missing the point.
Right.
They're the first of how many, they're basically creating a template in the commercial line space that Next has already proven, right? Next has already proven the case. And you can say what you want about Next. Agents want to bang on Next about their paper and this and I'm like, guys, none of that, you are talking about stuff that only matters in CPCU classes.
Right.
When the rubber meets the road, like none of that actually matters. And none of you are selling that way either.
Right.
You know what I mean? So like, let's not, I hate when people get all uppity about coverage when they're not actually, it's not like they're breaking it all down.
Yeah.
and looking, do you know clearly the differences between Liberty and Hartford and Travelers and Nationwide?
Right.
Do you know all the differences in nuance? Because somehow everyone knows that Next's paper isn't good, which I've looked through it. I mean, yeah, they have a couple exclusions. And if you're in New York, the contractor stuff is a little, whatever.
Yep.
But like, we're talking about exceptions to the rule, not the rule.
Right.
And I just see this, Next, Coterie, Pi. I see these, especially on the commercial lines, these companies start to stack up, and maybe not, 2 years or 5 years from now, but a decade from now, we could have an entire portfolio of companies that didn't exist 20 years ago.
Yeah. Yeah. The coverage one's an interesting one. I feel like it's just like they've got their list of all the reasons why. And so it's like, well, we're on coverage right now until you debunk that. And then we'll go to the next reason why this isn't someone to pay attention to. But let's be honest, for most lines of business, most of the coverage is pretty standardized.
Yeah.
And if you look at like Lemonade, that's all a terrible ISO product. Like that, it doesn't matter that the coverage is crap. I give Hippo credit for trying to create something new on the coverage side, but like Lemonade's doing just the same old. They're just doing it a little bit cheaper, and it's fast, but there's lots of fast runners quotes out there, and it's unprofitable because it's underpriced and they're overspending on marketing. But it's not the coverage, and on a $500 policy, or like a small maybe $800 on the high end if it's like a class that's a little bit sketchy or something, or they got some good revenues. But on the small side, you're talking under 1,000. You're not spending time selling coverage, and the insured's not going to understand it. So that argument's not holding water.
Yeah. And the form's so broad. The other thing too is you can't file rates for a lot of these classes unless you have standard, at least a basic minimum of coverage. It's not like these are admitted. This is admitted markets. Like this isn't non-admitted things where like someone just wrote down coverage on a napkin.
Yeah.
That's what I don't get. Like, is it the most robust in the history of the world? Maybe not. Yeah. But I'll tell you what, for a marketing consultant that needs GL and PL and works out of her house,
right,
the $975 a year can't be beat. It's easy. It's clean. You can use a credit card. I mean, think about this. This is the bananas stuff that just drives me nuts. So take the Hartford, right? You want to start a Hartford policy. You can't do payments with a credit card year one. You can only pay in full. You have to use a checking account to do payments. But on year two, you can go in and you can change it to a credit card from a checking account, and then you can set up payments on a credit card. So think about the standard 10,000 and under business, small business in the United States today. How many of them want to give up cash? Yep. Everybody whether it's for the points, whether it's to manage their income statement, whatever it is, a lot of that cash. I mean, that's what we do. I put everything on the card to make cash management super easy. And then I just pay the card off every month.
And so you've got one place to look for what all your expenses are.
I can use the, like American Express has the ability to like categorize it all. It makes it super easy for my accountant. So why in the world, like if you're small business focused, why in the world are you putting that limitation on your customers? Yeah. And like, these are the little things that like, when I know a customer has a $2,000 policy and it's Coterie or Hartford, and then that customer needs to make payments, I'm going with Coterie. Right. Because they're not going to want to not make payments. They're not going to want to make payments through their checking account, and I can't set it up to do that. So it's like, these are these little things that, don't hit the radar of the big nationals, where there's little incremental developments that just make these companies more and more favorable for agents and for customers. And, like I said, I don't think they're going to destroy the industry or even disrupt it. I think they just become a player, and I think they should be taken seriously.
Do you think it's possible I had this conversation with an insurtech, like a solution provider this morning. It sells to carriers, their frustration with the speed of larger carriers and like some of them, it's almost just resigned to like, and we're going to take at least 18 months to make this decision because that's just how we work. Yeah. That's sort of like, that's just how we work. Does that get to survive long-term? And do the Coteries of the world pressure that enough? Or do you think that, it's going to be the way it is forever?
Yeah. So I have a couple of feelings on this. I think one, that changes if you know the right people. Mm-hmm. a lot of insurtechs look at the insurance space like they look at fintech, and it's a completely different world.
Yeah.
How you prospect, how you make connections, how you build those integrations in the insurance industry is still, whether you like it or not, dark room, glass of scotch, handshake. I can trust you. You're going to be around.
Yeah.
Yep. It's so much about relationship, because that 18 months becomes 18 minutes if you know the right person.
Right.
So, I've had people push back on me. Well, Ron, and this is not to get political, but you get into that whole like more, we'll say, neoliberal mentality of like, I should just have to do a cold email and they should respond to it. And I'm like, that's not the reason our industry works, is because we are not how people make money. We are how people sustain their life and their business. That's the difference, right? So fintech is about making money, growth. That's the sale. That's the thing. It's a different world. If we mess up, someone's life is ruined. A business ends, right? A family is out on the street if we mess up.
Yeah.
So despite the fact that we're slow, the reason that the industry is slow on purpose, and the reason that relationships still matter, and while this is a metaphor that like glass of scotch in the back room still exists, is because everyone needs to trust that the person they're doing business with is going to be around. Because when you see some hot shot Silicon Valley, coming in with the MBA, who's I'm going to change the industry. And if you just give me $500,000 from your carrier, Chris Klein and I from Westfield had this big joke, how every insurtech like hits him on their list of, touch points is, well, geez, if you just give me $500,000, I'm going to change the way insurance is sold, So it's like, if you do that, what that person in the insurance carrier is thinking is, I have no idea if you're going to be here, and I'm going to be here for 400 more years.
Right.
Are you going to be here for 4 more months? I have no idea.
Yeah.
And that is why it takes time. And that's why the relationships matter, because there are certain people that you can call that if you know them well and they trust that you're going to be around, then they're like, I'm willing to give this idea a shot, because I trust that this person, he or she, is going to be around. And whether this idea works or not, I trust they're going to be around. And that is the key portion to our space. It's what most people don't understand about doing business in the insurance industry is it frustrates me how slow we move. But I will tell you, when I finally figured out why it moves at this pace and gained a level of respect for why it moves at this pace, my entire vantage point changed. It's this person, this carrier person, whoever, they want to know that if they trust you, that you're going to be around. And it's not, because ideas come and go, people take great big swings and they miss, and that's okay. What they don't want is like, I'm going to invest in you, and now all of a sudden you're over in the auto industry trying to rehash this idea and now swindle the auto industry out of something, or the legal industry. They want to know that you're here, that you're one of us, that you're going to play this game, win or lose, and those are the people that I've seen, and then you get a lot of people saying, wow, there's this mafia in the insurance industry of people who do this, and they all just, use the same people. And the reason that those little circles exist is because all those people trust that none of them are going anywhere, win, lose, or draw. That like, if they all put their money into something and it hits and it goes to zero, that all of them are still going to be around for the next thing, for the next idea, for the next challenge. They're all going to be there. They're not just going to cut and run.
Yeah.
And that is what gets deals done in our space. That you're going to be here. And so I see, so to get back to your question, since that was hopefully a valuable diatribe.
No,
I think the coteries push that. I think the pies and stuff help maybe speed that up a little bit. But I hope it doesn't change.
That's what I was going to ask you, is should it change?
I would love it to go from something a little more, because I agree 18 months is kind of the deal cycle.
Yeah.
And I also think that's a long time. But there's another reason for that is, these are multi-billion-dollar organizations who have development cycles and are planning out quarters and ahead. And, sometimes they're like, yes, we just can't get you in till 3 quarters from now, and you just have to
Right.
wait. So I do not hope that it changes. I would love to see it speed up a little bit. I'd love to see a little larger portion of the pie pushed for kind of like big bets, you know, moonshot type stuff. I would love to see some of that. But in general, when a hurricane hits a city, the insurance industry puts that city back together, and we have to make sure that that never changes. Like you can, you know, I mean, everyone listening knows that, you know, you watch CNN or MSNBC, they'll bang on insurance for things like Katrina and Houston all they want. The only reason that those 2 places even exist today are because of insurance. If it wasn't for insurance, you know, and was it all perfectly executed? No. But if it wasn't for insurance, neither one of those cities exist. They're both just devastated, leveled to the ground, rubble piles that no one lives in or works in anymore. And we can't, no matter what, regardless of what we do, we have to make sure that that always happens, that we always put our clients back together.
I might disagree with you on Katrina just because of how much was uninsured. I mean, same thing with Harvey in Houston, the amount of uninsured loss and how much like the Army Corps of Engineers stepped in and FEMA and whatnot. But generally, yes, I take your point. And there's a lot of things that were put back together by insurance, whether the levies and other things were or not. So where do things get to then? So if we look out ahead, like, because I mean, I'm sure as long as you've been in the industry, you've been hearing the death cry of like agents and brokers will be gone. It's all going to be the internet. So like, where do we get to? Is there a point where that's actually true, or is there some other state that we're moving towards?
No, the dark little secret that none of the digital insurtech brokers want to tell anyone is that you still have to talk to people on the phone.
Yeah.
You know, when you see like, I look at a lot of the other, because Rogue is a digital brokerage, I guess, in probably its most broadest form. I'd love to believe that the way we're doing things is a little different and certainly better. But if you were going to broad stroke us, you'd say we're a digital brokerage.
Yeah.
One of our core principles is an idea called no customer left behind. And it's very simple. When someone calls, regardless of how small they are, how curmudgeon-y they are, or as long as they're respectful, I guess, and or how difficult their policy is to place, we write that insurance, which means we handle E&S, which means you need a freaking phone call. You need to talk to someone on the phone. Are you putting dynamite in the ground and blowing shit up? Like, what's going on? How you handling this? Right? Like, these are things that you have to talk to them about, and you can't do it on a form fill. So the idea here is when I see that, I'm like, that's a really good, slick thing, right? These quote to buy, that is the easiest version of this. Like the fact that VCs have given some of these companies tens of millions of dollars is bananas to me, because I've done what they've done for 90,000, which means when those VCs come to me, I'm going to be way more expensive. Yeah. So because they have done the easiest version of this, I'm going to pipe in an API to a couple carriers and put a little couple fields in and get like simple bops and simple professional lines. That's easy. That's the easy part. The hard part is the 40 to 50% of the market that can't get a rate online. How do you handle that stuff? Right. So you have to be able to do phone work. So where I see our industry going, and this is where Rogue has positioned itself, is this hybrid agency where, yes, you are providing self-service and automation and outsourced, think virtual assistant based service work and touch points to lower your per touch transaction cost. Yep. But you ultimately have to have American licensed, phone ready, we call them client success managers or account managers or CSRs. You have to have producers who can get on the phone and talk someone through what's going on with their coverage, right? Like one of the major digital brokerages that raised a bunch of money the year just went full outsourced Indian call center, which to me is like, I'm so glad that they did that, because I'm just going to absolutely go after their customers and target them, because those people are not licensed. Yes, they could be great. And I'm sure that their English is amazing. And I'm sure they know how to work through. They're not licensed. They don't even live in the country. Like, I'm not saying that. What I'm saying is that's fine. You need to have those people. Then you need to have people who are licensed in that state who can talk through the nuances of coverage. Not every customer wants that, but there are enough customers that do. And I think it's way larger than what most people want to say. Like most people want to act like you can digitize 70 to 80% of the transactions. I absolutely do not think that that is true. I think that is a drastic overestimation of what can actually be automated in a digital quote bind issue in commercial lines. I think it's more like 40, maybe 50% can be automated, all the way to a number. And then you need to get someone on the phone. And even then, those people aren't hitting the bind button. They still want to talk to a human. Yeah. So this type of hybrid digital, kind of advisor agency, I think is the future. I do think there'll be some local shops still around. I think there'll always be people who are back, as the market consolidates. We could have 1,100 transactions in the independent insurance agency space this year, which would set a record by about 300 transactions, which is crazy. So what's happening is all these agencies are getting scooped up. It just creates a lower level need. And what'll happen is you're going to get backfilling. I think it's going to be backfilled in two ways. I think you're going to see Goosehead type quantum smart choice models backfilling that, because the cost of doing business today in our industry is so high. I mean, I have bled to keep Rogue going and get, now we're kind of past that thing, but those first 18 months, we're just bleeding. You just, the cost and the time and the nonsense that goes into running an agency is crazy. And even now, there's still huge gaps in our kind of operational function that we need to fill in the near future. So when you think about the best producers in our market, they know that they don't want to go, they want to own their future, but they don't necessarily want to spin up startup agencies because it's $100,000 right out the gate. And you have no idea. You're not getting paid by the carriers for months and months and months. It's not like you can just start selling widgets day one, right? Like you sell a policy today, you might not get paid for 3 months. Yeah. So that type of, I see these aggregated agency models, and then I'm sure there'll be some startup spin-ups, really truly entrepreneurial people that'll do that. But I think the days of like, I'm going to walk the streets of my town, I don't know that model startup can be successful today. I think if you have an established brand, I'm sure you can ride this out, but I do not think that on your own startup local agency, like your grandfather or whoever did 20, 30, 40 years ago, I do not think that that's possible today. I think the costs are too high. The sales process is too slow. And I just think anyone can drop a pin in your backyard and start marketing to all your clients. Right. And that was just never possible before. But today it is.
Yeah. You got your start kind of right as that transition was happening.
7 days before the zombie apocalypse hit upstate New York. Yeah.
Yeah.
March 9th of 2020.
Oh, no, enough for Rogue. Like you personally, like your start in insurance was like right when that switch is starting to happen. But yes. And
oh yeah. No, I agree with you. When I started, dude, it was handwritten accord forms and fax machines. And, there was e-sign didn't even exist. We were wet. And, and maybe some of the people listening, obviously people who have a longer history are well aware of this, but when I started, it was basically the old school way. It was email was revolutionary. No one did business over the internet. That didn't happen. There was
you didn't even have fillable PDFs most of the time.
No fillable PDF. Yeah, that didn't
PDFs were like an image.
Yeah, it was an image, and you print it out. You'd print out the image, and then you'd fill out the accord by hand, and then how you got signatures. Yeah. You had to drive to wherever the person was, and there were people. I remember going to a conference one time, and this guy had this process of mailing the apps to people, and tracking it. And everyone was like, oh, you mean it was like this revolutionary process that he had, which was essentially just putting applications with yellow tabs on them in the mail. Right. And they were like, what about the E&O exposure of the time differential? And what if they don't send it? And, and that was the crazy shit that people were saying. And, it's wild how far we've come, to where, geez, when I have to touch paper, I feel like we're losing just in time, not even that I care about it. Just the time of it kills me.
Yeah. I do have a fax machine and I have used it a couple of times, but never with an insurance company, at least. But there's a time and place for it, but hopefully those days are behind us. And that, I mean, God, in the pandemic, it was the worst because it was like, not only was it slow, then you don't even know when someone's going to make their rounds through the office that, that day or that week. And then like the person who needs to do something with it isn't there that day because you couldn't have people the same, like, as Rogue was starting up in March of last year.
That was the thing, man, was like, I mean, launching this thing into the face of COVID. I mean, it changed it changed the trajectory of our model. So we started, in all transparency, I was describing the digital distributed brokerage model. I mean, that's what Rogue is. So what we do is we're basically a producer incubator model. Yeah. So we have the internal processes, we develop a ton of internal leads, but we also, we help producers launch, be successful, and then ultimately when they hit a certain book value, give them the option of spinning off their own agency. So there's a whole thing to that, but that's my model. Is I want to have 300 Rogue agents in the next 3 years. So when I launched in March, that was our goal. We were going to be middle market commercial shops, helping producers basically own their future. That's always, I wanted what wasn't given to me, right? Like I wanted, what you have is you have these producers at the alphabet shops and USI and all these digital brokerages who are absolute killers. And then they hit a certain book value and they're just like, oh, hey, good. Right. And there's no place else for them to go. There's no next phase. There's none, if you're a salesperson, I don't care if you're pinned in the upper right corner of the D or you're in the I, wherever your style is, you are also ambitious and you have an ego. You have to. You can't do that job without it. So at a certain point, you want the emotional payoff of I did this. Mm-hmm. And that was never provided to me. And I'm not saying that something should be given to anybody, because it shouldn't. You have to earn all of it. But that being said, I do think that there is an opportunity to give people a path to that. If you don't get it, that's on you. Yeah. But if I can provide you with the tools, the process, the culture, and all you have to do is produce, and then you can have the opportunity of owning something. To me, that is I think that's a really good thing for a lot. I think it makes me personally feel good to give producers that option. Yeah. And I think it helps the industry because when someone owns something, they take a bigger look at it. They're more emotionally invested. So you're getting higher quality. The hope is higher quality service, higher quality diligence into these small businesses, right? Because small businesses are treated like garbage in our industry. And so that's kind of the model. And when I started, that was what we were going to do. And then COVID hit and no business in the world was picking up their phone. It was never going to happen, right? I mean, for the first 3 months, I didn't sell a single policy. I started an agency and for 3 months, I didn't sell a single policy because I built my entire operation to be small and middle market. And all of those business, I mean, we're still seeing pictures of people in China falling down dead in the street. Like this thing will just take you like that. Yeah. Everyone's scared out of their mind, and rightly so. And there was no way. So I had to do, the only thing I could do was pivot to micro and small commercial and go and kind of reach into my inbound history, my history of inbound, because there was nothing else. There was no way for outbound to work at that time. Yeah. And that's when we pivoted into small commercial. We now do close to 300 inbound leads a month on 0 paid ads. Yeah. And, that seeds kind of our base of operations every month. And now here we are 18 months later, we're cycling back to the incubator, which is great. We got 3 producers in the program. We're, hiring almost, we're interviewing, almost daily. And like I said, the goal is to be to 300 producers in the system in the next 3 years.
Yeah, that's awesome. It's a cool idea, and you're absolutely right on like not being handed it, but if you earn it, you don't even have the ability to have it. And I used to run a sales team for a carrier selling into brokers to get quotes coming in and all that kind of stuff, like get the submissions flowing. And I would ask my team, like, so what, like, tell me about this broker, how big is their book? And I go, we can't ask them that. Like, you can't ask a salesperson how much premium they generate. I guarantee you they want so desperately to tell you.
Yeah, they want to tell you. They're dying.
Even if they have a corporate rule that they don't share that, they want to find a way for you to know how successful they are because they're salespeople. And if they don't, that probably says something about their book.
Yeah. They'd be like, think of a number between 249,000 and 251,000.
Right. Somewhere
that may or may not be about where I'm at.
Right. Yeah, no, it's a mindset, and you have to know how to reward that mindset, or you lose the fire. And like once it's out, and that's what I see, like there's a lot of people in the industry who just sort of like they're just riding on their renewal book, and that's awesome. That's what they want. And there's a guy who plays golf like 4 days a week back when normal times, and he's living large, and he doesn't really have to do anything for it, and that's fine. But that's a very different kind of person from someone who's really trying to build.
Yeah. I think the mentality difference, and I've figured this out. I mean, this is taking a long time for me to figure out. So I hit, this year I hit 10 years and 347 presentations to the insurance industry. I went back, like when I was in around 100, I went back and figured out how many I had done, and I just count them, right? So
wow.
Took me a decade, and I've done 347. Sometimes 2 a day. So
it's a lot. It's almost one a week,
right? So that all being said, no one does content marketing. Nobody. I mean, there's a few. No one does it, and that has always kind of bothered me because I'm like, oh my God, I've literally given for free. Essentially to the people, to the audience, obviously I got paid a lot to speak, but to the audience, I've given for free every detail. I haven't held anything back. I've told them the tools, the process, the mechanisms, the way I think about it, how I source ideas, every single piece of camera equipment, everything. I've told everything, never put it behind a paywall ever. And maybe a dozen agents have picked it up and run with it, maybe in 10 years. So that bothered me because I was like, am I terrible at this? Like, should I just stop? Is it the industry? Is it the idea? What is it? And what I really came down to was, we're at a really interesting time. You are either growing or you're not, right? That's not a revolutionary idea. There is a very small, the portion of agencies that actually want to grow and the portion of agencies that say they want to grow is much different. And that's what it took me a long time to figure out, is that people be like, oh yeah, we want to grow. Let's do this. And I'd be like, great, here's exactly what you do. Boom, here it all is. You do this, and at least this portion of your business will generate opportunities and you'll grow more, right? Probably not the only thing you need to do, but this will certainly help. Just do this. And having no one done it, I basically came back around to, most people are fine with 3 to 5% growth,
right?
Which is great. Most people are fine with flat, actually. And that's the kind of one of the dirty little secrets. But they're going to say they want to grow. They want to say they want to grow. And the pool of people in our industry, in the traditional independent space, that actually want to grow, that are like, we want to grow, like put people on, hire people, and go, is very, very small.
Yeah.
It is very small. And that's when you see in these forums conversations around, should I hire a producer? I'm not sure. How much revenue should I be making? Like, if you want to grow, you need another set of hands to sell. Yep. So there is no time. Like, go get it. You know what I do? Like, I'm still in startup mode. I don't pay myself. I'm fine telling anyone that. I just keep hiring people because those are the people that are going to make money for the business, right? Yeah. Like, the classic thing is, I personally need to be making this much, and then you can duplicate. Well, you know what? I'm able to take care of some expenses, and I do have some other things. Yeah, I mean, you gotta pay the bills, but like, you have to reinvest in your business to grow. And when I see people having stupid conversations about, you don't add another account manager until you have this much revenue, there are no rules. You know what the rules are? Put people in your business and go. And I just see now I can kind of pick it out like this. You don't actually want to grow. You're cool. You're cool with talking about it. And you'll write a big account once in a while and you'll post on social media, and that's fine. But you don't actually want to grow. You want people to think you're growing, and you want to be around people that are growing because it makes you feel good. But you're not going to make those investments. The pool of people that are willing to make those investments, take those chances, is much smaller than we think it is.
It's right back to your earlier point out on the carrier side about willingness to take bets, willingness to put things at risk, because that's scary. It's, well, if I hire them, I got to pay them. And what if it doesn't produce? Well, what if you hire them and pay them and it does produce? Like, we only tend to see the downside of it.
100%.
Ryan, we could go for like 3 more hours. It's great to sit down with you though. And as you're talking, I'm like, there's a clip that I'm going to pull out and post that. Like, lots of gems in here. So hopefully people are feeling energized and pushed, and some good challenges for people who say they want to grow or may not even be saying that, but think about what it really takes and what they're willing to put in.
Yeah, I just to kind of put a pin in this whole conversation. I hope that it didn't come out pessimistic. I am incredibly optimistic on our industry. Incredibly. I think we're in the middle of one of the greatest times to be in this space. I think that we'll look back on this 2014, 2015, 2016 time to, and I think we're still in the middle of it. So who knows where the end is. I think we'll look back on this time and be like, look at everything that was happening and all the opportunity that exists. So I don't want people to think this is pessimistic. I just think that self-awareness is incredibly important. And that if you want to grow, there are people that will help you. And this is for carriers or whoever. But the only way to do that, and this is going to sound life coachy, and I don't mean it to be, this is just from my own beats, is we have to, as an industry, start to take a small portion of our resources or capital and allocate that to moonshot type things. It doesn't have to be pushing all your chips into one of those plays is not the way to go. We have to make sure that, like I said, whatever, Katrina, we can, when big nasty things happen, we have to make sure we're doing our job.
Right. We have to be here for the city. Yeah.
Yes. But starting to push just a little bit into some of these pieces of technology, some of these concepts, right? Like, you can't convince me that blockchain isn't a major portion of our future, just in terms of how data is transferred in our industry. And when you start to understand what blockchain is, I'm not going to say that I'm a savant, but I can tell you it at some point will change the way we push and pull data between different organizations in our industry. Yeah. Who's going to jump on that first, right? Yeah. Like, who's going to take some small portion and go, let's figure this out. So when it's ready, we're here for it. Like that to me are the type of plays that we need to be making. And I'm excited to see who does it. I don't know, in the meantime, I'll be growing my business.
That's awesome. Ryan, thank you for taking some time. Yeah,
absolutely.
Some bold, insightful comments from Ryan. Definitely, he's not someone who shies away from calling it like it is. And I think really charging us all into action, which is great. And I appreciate that he understands why maybe we've had the struggles that we've had, and he respects that. But really interesting perspective given the life that he's led, feet on the street, literally as an agent in the early days, making that digital transition, working at one of the leaders in, trying to help enable a digital way of transacting through his time at Bold Penguin, but also all of the agencies that he's gotten to know and touch through his speaking work, through his work at the Big I, and what he's building today, this digital hybrid, digital enabled agents. I've got that term wrong, no question, but it was really valuable to hear from Ryan, given the perspective he's got and what he's building firsthand. So I hope you took some golden nuggets of wisdom from all that. I know I did. And I kept having these like alarm bells going off as he was talking. I'm like, oh, that would make a great clip. Oh, that's a great clip. I got to pull that out for the show notes. Speaking of the show notes, you can always get those full depth, everything right in front of you, all the key points from the interview. If you ever want to go back and say, hey, I remember this interview. I don't remember exactly what they said. Let me just see if there's anything in the show notes. You don't have to re-listen to the whole thing, but of course you can always re-listen or rewatch right there at future-of-insurance.com/podcast. And that's where all of the entire back catalog from season 2, season 1 before it, and going forward, however many seasons we end up with, you can always catch those there. So you can find out more about Ryan and his business, Rogue Risk, at roguerisk.com. Easy URL to remember. And you should definitely follow him on LinkedIn. Stay abreast of everything that he's posting. It is content marketing because he's putting out things that can help educate all of us as buyers, as people participating in this industry. I mentioned Florian Grelo before as one of those people that I'm like, oh, this is someone you should follow. Ryan's another one that I always say, hey, you should follow this guy on LinkedIn and catch what he's putting out there. And of course, he's on lots of other social media platforms as well, but check him out. And a thank you to Ryan again for joining.
Thank you to Ascend for sponsoring this episode with Ryan, who through Rogue Risk is a customer of Ascend's and loves it and recommends it himself. So it's great to see them jumping on and sponsoring this episode.
And to all of you for tuning in, whether you're watching it, listening it, I hope you subscribe. I hope you give a thumbs up, a like, 5-star rating, whatever you have on your end to show some love for the show. It means the world to me and helps the show to grow, which is important. And of course, you can spread the word, tell people you know and care about, hey, this is something you should be checking out to learn more about where our industry is heading. So with that, I will say goodbye. We'll see you next time and bring you more insights about where we're heading in the future of insurance. Thanks, everyone.